how do you think about poor highs or poor lows on the profile? Can you speak to any nuances you've noticed over the years that you've been using market profile? So to me, it's all the same stuff, and it all reverts back to you could use the concepts with price action. In fact, I do, right? In fact, we have a law of market dynamic, which is not relative to profiling at all, right? Law 10. So the concept is derived from auction market theory. And if you'll bear with me in a stupid example that I'm sure many of you have heard before, if there's an auction for an NFT and we start trading right here at this price, and we go up and we trade some at this price, and then we come down, and maybe we go lower, and then sellers dry up, buyers aggressively buy at those low prices, and we trade back up here, and there's some transactions that occur, and then maybe we trade back up here, whatnot, well, what this market is telling us with actual information, not just like, let me read the tea leaves here. What this data from an auction process is telling us is that the market went and probed lower from where we originally opened and started trading. And it rapidly found a lack of continued selling and aggressive buyers that brought us back up into this, let's call it initial balance, another market profile term. And then we went back up to the high where there was some trade before, and we traded a little more, and then we came back down. So at this point in the profile, we have what's called a poor high. If at this point, without looking any further, well, I guess it doesn't really matter, we were to make a profile of this, well, the low is here, right, from here. The high is at this level right here, and we'll just draw a line and connect them. And then we have, a lot more trade that's occurring here, and we have very little trade that occurred into the low. And if we're using a profile, like a market profile, we'll probably have something like 2 or 3 periods, right? Maybe this is 1, this is 2, this is 3, that stack up here and form what we're talking about, a poor high. Well, that's the graphical representation of it, but what's going on in this market? Well, people got disinterested at selling these monkey NFTs or whatever the heck's going on in the world right now. And people got really interested in buying them, and they just reverted us back really quickly, back to this range. And we were able to, this price that we had traded at the high of day, we were able to get there again. And then, buyers dried up, sellers got aggressive and pushed us back. But we're starting to form this area where we're showing, the market's showing that multiple times we can trade there, and we will transact there, buyers and sellers. The implication here is that if you want to put probabilities on price going a little higher than the existing range that we've developed versus go lower than the existing range that we've developed, I can assure you that the probability of one of those two things happening is on the higher side, because the market is showing us that people are willing to buy and sell up there repeatedly. And if you can repeatedly transact up there, guess what? Don't you think maybe some of those buyers are willing to pay a penny more, and then a penny more, and then a penny more, until we find ourselves in a situation like we found ourselves down here, where they just totally get exhausted and refuse to do so anymore and dry up and stop buying. And all these people who had bought before realize this is really high prices here, and we're starting to maybe stall out in terms of momentum or anything, or just anchoring relative to where they bought. Let me sell some. These are great prices relative to where we've been. Let me sell some. And so now there's an aggressive selling that, and that, you know, maybe we end up taking out the poor high, which, remember, the point of the poor high that I'm displaying here is that probabilistically the market's not done in that direction. That's the implication of poor highs. And so maybe we do go take it out, and then maybe we get this event, which we call excess, creating excess, happen on the upside now, and then maybe it reverts back, and then maybe we start trading back in this range again. And then you end up with more of a balanced profile with excess at the highs and the lows. Market profile is not just some magic read the tea leaves indicator, guys. For those of us who do it right, it's a way of thinking about not this like theory of, well, I guess technically it is a theory. I'm sorry for that. It's literally called auction market theory, Merritt. But it's not so theoretical. It's not. We're talking buyers and sellers here, and this is just a graphical representation of a lot of that activity. That's all. It's not perfect and it's not magic, but it does a good job for us.